Everybody, this is Alex from My Trader's Journal, and I just made a trade on NFLX that I want to recap here. I have been out of commission on trading my own account for a few weeks or longer for doing much of anything on it, but uh, I'm trying to get back in action now. I'm starting off with a bang, hopefully, or at least taking a bigger risk than I usually do. In some ways, and a smaller risk in others, so I'll kind of walk through it. So this is the chart for NFLX. It's been going up, still in an upward trend, taking a little breather here. But from what I can see, the trend line here, where it touched down a couple of weeks, or at the, last week on the 4th, had brief touch there. That was the trend line of lower highs that was going through. It might come back down and touch that again. This is one trend line I had in there. That's kind of already broken, and I'm not sure if it's going to play resistance again as it tries to mess around there. But the ones I'm really paying attention to here are these. Well, the one I started off with. But these, I kind of drew a few of them in here. This one ignores some of the lowest points, but it catches the main lines here. This one actually goes all the way back. I think I did 13 months on that one. Yeah, it goes all the way back to the beginning of this rally that started in November of last year, so about 13 months worth of that. It would put it NFLX coming down to around 170 or so, and another one that has a different starting point around 165. So all in there for a range, and it might overshoot one of these and catch the other one. Not even using the other one, but just overshooting. There's also the big 100-day moving average in there that could play a nice role. Well, you know what? That's the 200-day moving average. It's I have two of these the same color by mistake. But I decided I'll take a diversion here. I have 3 different options expiring into this week, and they're all out of the money, not really much of a chance of being assigned. So I have a lot of money available to trade with, or as far as the percentage of my account. A lot is very relative, obviously. So I came over to the option chart. They have February and March. I went ahead and went with February. I kind of highlight why here. I looked at a few of them from, and I did 9.6 weeks out. It's time right now that my trade went through was just 6 minutes before the end of the close. So essentially, not even counting today as the trading day, there's 9.6 days left. Or excuse me, weeks before I left out of it right now. So I'm a little rusty, I guess, from not having a vlog in a while. 9.6 weeks left before the option expires. So I went with the February and should have been 13.6 left if I went out all the way to March. I wanted to stay using the chart, as I pointed out. I think it's going to be between 165 and 170 on the bottom side, if it gets there. I mean, I'd love it just to see it find support at 180. But I started looking at what is the cost if exercise. That would be in that range for any of these. So I came back to 2 things. How much of a drop could I handle? All between 10%, almost 10% for this one, and 11.5%, almost 12% on that one. Narrowed it down then to what would be, not even paying attention to the weeks after I entered these few choices in, to look at what would be my return based on what I put in. This middle one here, the February 175, would put it out to a 23.5% return, and it was actually trading at 185.70 when my order hit. So let me flip that over. I get referencing something I haven't shown y'all yet. So my order hit just a few minutes ago at, well, it's 5 till, almost 5 till, 6 till when the order hit before the close. And I sold it for $7.30, and after commissions of 69 cents, I'm getting $7.29.31, which is pretty good considering that it's only 9.5 weeks out, and the strike's at 175. So I can take about another 10% drop on it, but this is even cooler on this. Let me shrink this down a little bit. Let's go just for 6 months. This also shows a little bit more of the trend line here that broke, but it's still hovering around there, so I'm curious how it's going to work. The moving averages are pointing down, at least on the 10 and 20-day moving average. Not a fan of that. Also not a fan of the 10-day being below the 20-day. So I'm off my usual pattern here, where I don't usually like to trade on it until I've seen it go up. Find support. I'm kind of getting a little bit early here, maybe too early. But I think that if it comes down to that 165 range, let's see what my cost would be, 167.71. So around here, that would be, I'd first have to see it fall below the 200-day moving average here. It's hovering right around the, let's see, the 100 days at 185.69. It is just a few cents below that. It was actually almost dead on that 185.70 when I made the trade. And it was on a limit order, so when I placed the order, it was just above that. Closed, I don't actually have real-time quotes on the last, just bid-ask on this. And now it's after 4 anyway. Anyway, I think it's going to find support down here. I think I'll be good. And here's what I was going to show. So it hit a high back in October at 204.37. So let's flip this over on my spreadsheet here. 204.37. That would make it down to almost 18% of a correction before my cost per share hit. So I'm hoping it doesn't go beyond a 20%. I would think that around 20% it would be good. I just got my email a few days ago from Netflix saying that my price is going up $1. I can't imagine anybody really canceling their service over that dollar increase. So at what was it, like $9.99 before, now $10.99, or maybe it's even $1 more than that. Basically, it's 10% increase on their revenue they're going to pull in, and that's a pretty good bit. This company can just do that on a dime, not have any problem. Their PE is ridiculously high. This should help bring that down some. I don't know if they're going to get any more multiple expansion this year because it's already been shrinking throughout the year, but I'm counting on the technicals more than anything else. I do think their profit's going to go up. They're probably going to surprise. Maybe not on the next earnings call, but hopefully by the one after that, once these new fees start coming through for everybody. And so there it is. That's the chart. That's my spreadsheet, and that was my order that hit. And I'm back in with some skin in the game finally. If this starts going south, maybe on my next trades I'll take fewer risks. But like I said, for now I have these 3 that are expiring out of the money. Even my January 148 on IWM is pretty good. It's almost $3 out of the money. Triple Q is at 155.69-ish, and so that's almost $3 out of the money too. And so I'm not really worried about any of the stuff I have in play. So if I have one riskier trade, I think that's good, especially if I can get a 23.5% annualized gain. I'll be happy. It's a good way to start the year. And if it goes south, well, I made a mistake. I don't think it's going to go below 100. So maybe I lose a couple $1,000. I don't think so, but we'll watch it, and I'll keep trading options on it to try to dig myself out of any hole that I create. That's it. Thanks for watching. I will try to be a little bit more frequent with my updates in the near future, and hope you all are having a good end of the year. Bye.